Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, we have the hourly chart of gold in front of us, and we had a choppy week, confusing week, and we can see that we do not have any direction on the chart of gold. And if you look at the market sentiment, you can see US dollar slips after inflation data, Fed meeting looms next week. The US dollar inched lower on Friday after data showed inflation rose modestly in December but was trending lower, which should keep the Federal Reserve on track to cut interest rates by the middle of the year. My dear friends, I am tired of rate hikes, rate cuts, rate hikes, rate cuts. So right now, I even don't want to think about rate hikes and rate cuts. Okay, let's look at the chart of DXY, and we can see the dollar index is still trading inside the range here, and nothing has changed. Okay, nothing has changed. It is still trading in a very narrow range, and still we need a big move here. Overall, we can see after a downtrend, okay, market showed good amount of recovery, and right now market is consolidating. And to continue the upside, we need DXY above 104.50. If that happens, then we can consider that finally US dollar index is showing recovery, and we will see pressure on Euro USD, GBP USD, gold, and others. But in case DXY or US dollar fails to break the resistance and starts going down, okay, then it will be inside the previous range around 102. And if market breaks 102, then we will get to see good amount of downside, and the next support will be around 100.50. But right now we need DXY out of this range, then only we will get to see proper direction on the US dollar pairs. Not only in gold but other USD pairs also, you will see a total confusion. Okay, and honestly, I'm done with rate hikes and rate cuts, and rate hikes and rate cuts. And my dear friends, if you want to go deeper, you can check out FastBull for further fundamental analysis. Because usually we are clueless how to do the fundamental analysis, and FastBull can be really useful. In our previous videos, we have discussed plenty of times about the economic calendar, the AI signals, but today you can check out FastBull for their fundamental analysis. They have two sections: the views from the institutions and views from analysts. You can see will Fed push back against imminent rate cuts, weak inflation and strong growth underscore the Goldilocks US economy. So from here you'll get what the institutions are thinking. But I like their analyst section. They have a team of in-house analysts, and you can see that they post their analysis. And the best part is that you also get to see the transparency. You can see how many pips profit, how many pips loss. You totally get the picture. For example, this you can see USDX is fluctuating slightly to sell after a rebound. You can see how beautifully, okay, they post their analysis. So if you're looking for a proper fundamental analysis, if you really want to grow your fundamental analysis skills, then fastbull.com can be a very useful tool. So the link is in the description and also in the comment section. Check them out. And my dear friends, this is the weekly chart of gold in front of us, and here we can see that there is no structural change on the market. Overall, we can see market is still showing signs of retracement, so further retracement is possible because the next dynamic support is around 1960, 1970. So it will come around 1975, 1980, but as of now we just can see that market is showing signs of retracement, nothing as such. And the ascending triangle pattern that we discussed in our previous videos is still very much valid, and this is nothing surprising because ascending triangle pattern is a bullish pattern and gold is always bullish. So if you're a positional trader, you should always try to look for buy positions only, because the supply of gold will always be limited. And on the daily chart of gold, we can see that gold is forming small lower highs. Okay, so gold is forming small lower highs here. And as we all know, okay, as we all know, the next support on the chart of gold is around 1980. And the best part is that you can see around 1980, we also have the 100 moving average. So if we combine the previous support and the 100 moving average, if market drops also, okay, gold chart on the daily time frame is saying that yes, buyers are present around this area. Now, if we go the 4 hours time frame of gold, you can see the same thing. Gold is forming lower highs here, which signifies that buyers are slowly losing their strength or new sellers are coming in. So in the coming days, there may be some strong selling pressure in the market. Okay. Now let's look at the trading opportunities for the coming week as well as on Monday. Most of us are day traders, and you can clearly see that this is not an ideal chart for any swing trader or positional trader. But if you have any buy position as a positional trader, then that's a different chapter. You will be getting profit in the coming days because gold is always bullish. Okay, now as a day trader, if you look at the chart of gold, we can see that we have many levels. Okay, so let's try to understand one by one. So first of all, we saw the market took some temporary support around 2016. So on Monday, the market opening will be very, very important. Usually we don't get to see much volatility right after the market opening. But for the last couple of weeks, gold is surprising us a lot. So right after the market opening, if you see that gold is going down, observe the market around 2016. There's a good chance that market will break 2016. If market breaks 2016 during the first half, you can look for a sell, but do not expect much because we have previous price rejections around 2012, 2013. So how much you can expect? If the volatility of the market is low, if market goes down with low volume, we can expect around 20 to 30 pips, not even 40 pips. Okay, 40 pips can be risky because volume will play an important role. Without volume, it may fail. So if you get 20-30 pips at the breakdown of 2016, you can look for it. And then the next support will be around 2009 to 2010. But here the volume of the market will again play a major role. Okay, suppose, try to understand the scenario here, because see, in market everything is subjective. Okay, so if you see the market is going down, observe the size of the candle. If you see normal candles like Monday morning candles, then 20-30 pips is enough. But if market surprises us with heavy selling pressure, then obviously you can expect 40, 50, 60, 70 pips, isn't it? So you can continue with the sell position. And if you see that when market has reached 2009 2010 level, okay, it can be 2011 also, if the selling pressure is very high, okay, in that case, don't do anything, just exit from your sell position and wait for the market to react around this area. But on the other hand, if you see that around 2010 2011 market is going down with small red candles, okay, in that case you will get the basic idea that okay, market is losing momentum, so there is a high chance that market is about to take support. And if market takes support, you can go for a buy as well. Okay, but taking a buy around this area can be a little bit risky. But on Monday, usually we don't get to see much volume. That's why I'm discussing this. On every chart, we have multiple trading opportunities, but some are risky, some are reliable, and this is a risky level. And later on by the US session, if you see gold is going down, gold has crossed 2009, you can look for a sell below 2009 as well. At first, you can look for a target of 40 pips. If you see that after 40 pips also selling pressure is still very high, in that case you can continue. Okay, and our next support is around 2000 to 2002. As of now, let's keep it around 2000 only, because there is a chance that in the coming days market will break 2000, head towards 1980. That's a different chapter. Right now it is not required because I'm coming on Monday again, isn't it? So as of now, just wait for the market opening. If market breaks 2016, we can look for a quick sell position. But if the market surprises us with heavy selling pressure or volume, you can continue. And the volume of the market will decide whether to look for a buy at 2009 or whether to look for a sell below 2009. Okay, 2009, 2010, 11. Now, let's talk about the other opportunities. Like if the market starts going up from here, what to do then? If you already have any position on the market, you can continue with it. But if market breaks 2027, If gold breaks 2027, there is a chance that market will continue the upside and you can look for a buy. You can look for a buy above 2027, but keep in mind that volume is important. So avoid in Asian session, but yes, US session means volume. So yes, if market breaks 2027 with volume on US session, you can go for a buy above it. Where is the next selling level? Next selling level will be around 2036 to 2040. This area will be our selling zone in the market. Why this is a selling zone in the market? Let me show you. Okay, because my dear friends, we have seen that though we have previously seen Fibonacci work, what am I saying? Okay, but we have seen considerable price ejection around this area, so we can expect that sellers will be present around this area again. So this is not a very strong resistance, but yes, if the volatility is not very high, we can expect some selling around 2036 to 2040. If market reverses, we can look for a sell. The strongest sellers on the chart of gold are around 2050 right now, around 2050. We have FIBO 78.6% retracement level. The previous support will also be working as resistance here. And here we are looking for a buy above 2027 because market has shown price rejection around this area. If market successfully breaks 2026, 2027, we can expect that finally buyers have won the battle and we can expect a continuation. Not a pure trend reversal, but at least we can expect some sort of continuation. That's why we can look for buy above 2027 as a breakout. Okay, and these are the levels, and we can look for 2009 is important because market has shown 2009 has previously shown strong price rejection. Okay, and 2000, why 2000, 2002? Because this level is a psychological level, and previously also it has shown good amount of upside. So 2000 will be working as a strong psychological support for the market as of now. So these are the levels and these are the trading opportunities that I see on the chart of gold right now. Hopefully you guys liked it. My dear friends, do not forget, we are traders, not gamblers, so do not trade blindly. Okay, there are multiple levels in the market. That doesn't mean that you can trade each and every where you cannot trade each and every level. Okay, for example, see, every weekend, okay, every weekend I find around 40 to 50 trading opportunities for the coming week. But in reality, I only place 7 to 8 orders because most of them fail. Sometimes they work also, but I do not place the order because see, following proper discipline is very, very important. Okay, so that's all from my side, my dear friends. Thank you so much. Bye bye, take care, have a lovely weekend.